Day 47. Let's get an update on these trades. The Euro US dollar first has turned against us. Heikin-Ashi goes blue, and we're not going to get any profit from this one. It is going to be a loss, around about $13 a trade, just over $13 each, $39.96 total. Couldn't get us there. Did find a low on the first day, got us there previously twice. Third time, not so lucky. Did manage to take profit on the CAD Swiss franc though. That was yesterday, and it was right near the bottom of price so far as well. You can see the trade and stop loss kicked in, but it's almost getting knocked out. Price right back up there now, and only around about $3.50 in profit for it. Did take home $21.26 from the trade, a less 33-cent swap. So at least we know there will be guaranteed profit in this, even if it swings back and takes out this stop loss here as well. But we've just about got the signal, so we'll hang on to it. Pound New Zealand dollar just clinging on there as well. Not in profit for this one. Hasn't been anywhere close to that. Currently around about $13 down per sub trade. So similar situation to where the Euro US dollar was at, but this one hasn't quite lost it yet. One more chance to push back. Maybe it can, but for now, not looking good at this last hurrah. We will see who has the last laugh. Day 48. This is the end. As we close the doors to the strategy, and there is no chance anymore of it reaching profitability. These signals have gone against us. Great British Pound, New Zealand dollar, let's start there. All three sub trades are still open, but we've seen a Heikin-Ashi go orange. It's going to be just under half loss here, around about $10 per sub trade. And there they go, a CAD Swiss franc. Just about in profit on this one, 20 cents. But the Heikin-Ashi has turned blue. I like the look of this trade, but it's moved quite a bit back against us. And now, in fact, it looks like maybe we were just lucky getting right at the edge of it when we took profit. Either way, there it goes. Also worth noting, of course, that we did lose our trading stop loss sub trade on the CAD Swissy as well last night. 1 minute 54 seconds after the turn of the new day. Still managed to get $1.50 from it, which highlights further how little price went after we took profit. We really were on the extreme limits of where price went to. Maybe it carries on in that direction and this is just a small retracement. We will never know, but that is it. After all those trades, our closing balance $5,310.68. That is after 48 days of trading, just shy of 10 weeks. And it is quite a bit of a way down from where we started, $680.75 down to be precise. That was across 31 trades, so averaging just under $22 loss per trade. That's from our starting balance of $5,991.43. Based off of that, this strategy can take money off you pretty quickly. Let's go to our trading journal and check out all those trades, find out exactly how much green was amongst all that red in the end. Our journal is complete. Let's go through these trades. Not all of them, of course, because there is 31 in total. Let's have a look how it went. Started pretty rocky. Not a good start with these two losing trades, particularly that Aussie caddy. $90 down was always going to be hard after that. Then we got a bit of a winning trade from the Euro Aussie dollar, but that one did take its time. We were in it a week, and meanwhile, just in 1 day, we had these two losers here, the pound US dollar, the CAD Swiss franc. Then more losing trades. A bit of a winner here on the US dollar Swiss franc. That one was not too bad. But at this point, the damage was done, and we are about to hit red row. Look at this. Loss after loss after loss. Bit of a redeemer there, but that is a minimal amount compared to all the red you're seeing. All of these sub trades above a $20 loss. Again, a touch of green, but it wasn't until right near the end. Here we are, this pound Swiss franc. This one started to change our fortunes a bit. We had that really nice trading stop loss, 72.75, along with the double take profit. And we got the double take profit on the Aussie caddy as well. So both these trades made us feel, actually, maybe we can get something respectable out of this. But unfortunately, we couldn't get the big winner that we needed. It was a lot more balanced towards the end. If you see these sub trades that are losing, they're not over the $20 mark. $13 here, 10 there, 9 down there. Much more reasonable. So we did get a nice run of trades towards the end, but there was that period back up here, mid-November time. We were in a range and there was no getting out of it anywhere. Heikin-Ashi was taking us in and out and in and out. And it wasn't even a flip on a signal for a lot of these. It was a full-on straight to the stop loss. That is how the strategy went. And you can see the final figure there, $680.75 down. And I've split it up to show the 3 sub-trades, how they each did. By far the best performing one was sub-trade A. That was the 1 times stop loss, 1 times take profit. A lot of traders out there would advocate and say, well, you have to have a 2-to-1 risk reward ratio because you need to be making more than you're losing. But with the Heikin-Ashi, we can see here, compared to that $146 loss from sub-trade A, 263 lost from sub-trade B, the 2-to-1 risk reward ratio. Almost twice as much, and nearly the same for the trailing stop loss as well, $253 down from that one. And if it wasn't for that nice $72 trailer, this would be considerably worse. But based off these figures, you see 1-to-1 risk reward ratio, that came out on top, even though it was still pretty damaging to the account. So if anything, you might want to flip the risk reward ratio, maybe have a 1.5 risk to 1 reward or 2 risk to 1 reward. Try and make sure you actually get some winning trades, because as you can see, 2 reward to 1 risk, no good at all. But that can be applied to the strategy as a whole anyway. Not a good one at all. Let's just get our final thoughts on it. Final thoughts. As you saw, obviously we couldn't get anywhere close to profitability. I don't think the smooth average and awesome oscillator were the worst filters, but a big problem with the strategy, it came from using the Heikin-Ashi as a key direct entry signal. That was a mistake, and based on the results of this strategy, the Heikin-Ashi loses a lot of credibility, making it very difficult to be able to recommend it in that function. It simply cannot handle itself when price gets into a range. You will not be shy of trades as the indicator flips back and forth, something we did become accustomed to when we lost the most money. But maybe the main problem when price was in a range was not giving the trades enough of a chance and having to sometimes shut them off prematurely. This comes from 2 aspects of the strategy. Firstly, using the Heikin-Ashi as an exit signal as well as an entry signal. On a good few of our trades, we found ourselves shutting off those trades because the Heikin-Ashi turned against us, only to then suddenly lead us right back in on the very next period, causing us to miss out on the actual price drop that came with the Heikin-Ashi turning to give a valid signal again. Secondly, as we've touched on, you might want to consider widening the average true range multiplier for your stop loss distance. We used 1 times ATR value, which clearly proved to be pretty tight, so you may want to increase it to 1.5 times or 2 times ATR. Just do be aware that at that point you might want to consider rescaling your take profit levels, which can be dangerous in itself as well. There were a couple trades in this strategy where we only just managed to take profit, and that was at our lowest level of 1 times ATR before suddenly price reversed against us. It's always a balancing act with the stop loss and take profit, but if you are wanting to trade a strategy near identical to this one, those are 2 options for trying to get some longer form trades going while using the same entry signals. Let me know how it goes. And the final thought, if the Heikin-Ashi candles are pretty bad as both an entry and an exit signal, what are they good at? Where does their use come from? Can we say anything pleasant about the Heikin-Ashi candles? I suppose we can. They can be useful if all you are wanting is a quick look back at the price, merely glancing at a chart for a feel of what the general goings on have been with the price action. The Heikin-Ashi candles will smooth all that out and make it easier to understand the lagging data. Again though, I certainly cannot recommend this as an entry signal, and there aren't any settings that you can change, so best to stay clear of this one in my humble, modest, unassuming opinion. If you are frothing at the mouth for more information or videos on this strategy, you can find those in the video description. And our last word of warning to remember that this strategy, as always, was traded with demo money. Thank goodness for that. If you are enticed by the results from this strategy to take it live and bet your remaining credit card balance on getting trading gains, then I can't tell you what not to do with your borrowed money. Thank you for watching. This is Project Trade. I am Warren Buffett's guiding light, and there will be more.